All right, all right. Good morning, everybody. Careful, we got the Treasury Secretary out there chipping teeth, and he just started talking about gold. Revaluing gold reserves is not what he had in mind. He says, whatever. He he's out there, so just keep your eye on what he's talking about. He always has the opportunity to rattle the market. Otherwise, Hong Kong up 1.5, Japan down 1.5. Most of the U.S. markets are down at least a quarter. We see small caps down the least. And Europe's in the green. It's a really bifurcated morning. Got to let things play out a little bit. We get some job numbers today. And we got an auction, the 30-year. It's kind of a big deal. You know, I know it seems like I'm the only one that ever focuses on these auctions, but there's a reason for that. So even though it has minimal impact history, I wouldn't be wasting my time looking at it if I didn't think it was important. So just keep your eye on the clock, watch for these auctions to come out, and just be ready for a little bit of volatility or some violence. I thought there was something else in Japan that was coming through tonight, but I'm not seeing it. So maybe I'm just misremembering when it's coming. We did get the dollar breaking back down below that 107. I mentioned that as a double bottom with a bear trap, this didn't really spring back up like we would expect a really good double bottom to do. If it had, it'd be more of a V shape, and it would have at least challenged the midpoint of this move. It didn't even get that far, right? And it's already fading back down. So when we look at a double bottom, a lot of times we can try to argue, is this a double bottom or is it a cup and handle? Generally speaking, if we don't break down lower and instead we bounce right on the line, a lot of times that's a good signal that it's a cup and handle rather than a double bottom. This time we actually broke the previous low, went lower, forming the double bottom instead of a cup and handle, and yet we're getting a handle and we're moving back again. So, yeah, it's the dollar. Either way, we're below 107. The pivot broke. We went underneath it. The bear trap didn't function very well. It doesn't seem like we trapped any bears, and we're back below 107. We want to keep that. Keep it below 107. Keep your eye on it as Bassett is chipping teeth. Make sure he doesn't say something that moves that dollar back in the other direction. And while we're at it, keep your eye on the 10-year. Get back below that 4.5 as a good starting point. That's the swag level, right? SWAG. It's a floating line in the sand that we redefine based on where we're at currently. Same thing with that 107, right? If we were down in the 101 area, we wouldn't care about 107. We would be focused on the 100 level or something like that. So these levels that I'm giving out, don't think that they have, some long-term precedence to them. They're just in relation to what we have currently. We did get that pop up into the levels that we were talking about yesterday, focused on trying to get a new high, and we did it. If we're just solely, looking for the textbook answer of a higher high or higher lows, then sure, we absolutely got it. We wicked higher yesterday, but we weren't able to keep it, and we couldn't even close above it, and we're already back down underneath that level again. The topping pattern continues. That's the main takeaway, that we're still not done. We're still not out of any of this yet. And as I've mentioned before, we could spend half the year just chopping in this 400-point range. I know it's not what anybody wants to hear, but depending on, how far away you are from retirement or what your long-term account looks like, you may prefer this to, an 800 point or 1,000 point drop. Kind of go back to 2022 and that move to the downside and how frustrating it was if you were in a long-term account that was mostly long, because that's what most long-term accounts are, is long accounts. So sure, we're not breaking out yet. We're not making those new highs, not continuing on, but we're not breaking down either. There is more concern that, as we get through the later part of the year, that we're going to see a lot of plumbing in liquidity start to become an issue. And that's why paying attention to Treasury Secretary today and the things that he's talking about is important. We continue to hear Powell say he can't be fired and he doesn't have to listen to Trump and blah, blah, blah. But they're testing the waters. They're looking to see what they can do to replace him if he isn't going to play ball. And it's just something to be aware of, right? That Fed liquidity. In the last QRA, he said they were going to maintain Yellen's plan over the next few quarters at least. And that kind of ties in with the Fed and what they've been doing with QT. And, well, the projections on that are late 2025 into early 2026. So if Scott's just waiting for the Fed to finish before he starts moving into longer dated stuff, then we've got a year. If they don't wait, maybe we got another quarter or two. We'll see. Either way, we did make that higher high, even just by a technical standard, but I wouldn't count it as a good signal since we didn't close above. We don't have a significant change to the call or put wall. Zero gamma volatility trigger, everything kind of just where it was. The spot gamma founders note didn't have the AM yet, but in the PM they were talking about the big JP Morgan collar and laid out the levels on it and kind of pointed out that it was starting to show up within the trace that they use, right? It's a real kind of fancy system that they have on their website. 6165 short call. So if you haven't read that spot gamma founders note from yesterday that I posted this morning, check it out. It's an interesting read. And it's kind of the line in the sand. Of course, that it is focused on the SPX, not the ES, right? So 6165. That's at this GEX 3 level. Overnight volume at 57. It's a little light, but nothing of concern with the current environment. This is fine, right? It only feels a little light because we were getting some pretty good sized numbers where we were seeing, 120, 150, 80. So when you get 57, it feels a little light, but really we're above 50. It's fine. If we get below 48, then I'd be more concerned about that liquidity issue. So we had decent participation last night. It's a good way to kind of approach it. All right, the ADR for today is a lot like yesterday. If we want to hit the ADR lines, we're going to need to do an inside day breakout. You can see yesterday's high and the ADR is up here. Yesterday's low and the ADR is down here. So we would need to get an inside day breakout on either side if we're going to hit the ADR line, just like with yesterday. A lot of times, one of these ADR lines will be within yesterday's range. It makes it easier to see it as a target because we don't need a breakout to get to it. We still have the expectation that we're waiting on something. The market going sideways like this is our indication that whatever it is, we haven't got it yet. When we get it, we'll all know, and we can continue to ask, well, what is it? Is it the job numbers? Is it, the 30-year auction? Is it OPEX on Friday? It could be any of those. More likely it's OPEX. The job numbers we're going to get today, they're not the big ones. It's not non-farm payroll. But we'll know it when we see it, right? Because when we do get it, we're going to finally get out of this range. So until then, just like I said yesterday, continue to play the range. We can measure the range, mark its half, and then give the 111 and the 1236 on each side of the range breakout so that when we get the reversals off of that breakout, we can play it back in. There's the 1236 reversal from yesterday. So it'll be the same thing now for today. Just capture yesterday from its high to low, plot it in both directions. No matter which way we break out, we've got the 111, we got the 1236. It's very likely we're going to come back inside the range until we get whatever news it is that the market is waiting for, and we finally begin to expand to the upside or the downside. So 61.21 to the downside puts us down at the lower ADR, or 61.75 to the upside, and not even close to the upper ADR. Today's central pivot range, the range itself is just mildly bigger than yesterday, and neither one of these are really wide. They only seem wide compared to this one over here, where it was so narrow, all you can see is the pink line. A narrow channel implies that if we break out, it'll stick. So these are wider than what we had, but not very wide. This one being higher than yesterday's gives us a bullish bias. Price opening above it also gives us a bullish bias. It's not an MDP, a missed daily pivot, because we've already come down and hit it. The fact that we went underneath it and came back up, well, that was a nice recovery. It was a good bullish signal, but we broke back down again. We weren't able to keep it. And if you follow that path, then we've been setting lower highs and lower lows since this high that we made last night at 3 o'clock. It's interesting to note that that was right on the money, right? That we topped out into power hour, and we've been moving lower since then, consistently and consecutively. So it's very likely that if we break the low that we have in this Globex, we're going to challenge yesterday's lows and see if we can change the shape of this range a little bit. Because if we use a Linreg line, you can see the slope and the shape of this. So we're due to test the lower edge. Just turn that into a channel if you want to. Redraw as channel. Channel's a little skinny for my taste, but it'd be the lower edge that we're looking for here. A lower edge test. $61.41, this week's volume profile point of control. And with the assistance of last week's volume in that same area, we're still looking at the same thing. Not much has changed because we're still in the range that we've been focused on all week. We got to get out of this range. If we break to the downside, like I mentioned before, it's really shallow here, right? We ran up really fast. We didn't leave much footprint behind. And if we go back into that area, it's likely we'll fall back down really fast because there's not much there to follow in the footsteps. We'll just drop right back down through it. This is what they often call that air pocket of risk. I don't want to use that phrase. It's not mine, but you get the idea that it just dropped right back down through it, right? And that would line us up with 6092 cog line right around in there as the point of control for last week. Ten-day, 30-minute volume profile with TPO. The TPO still hasn't caught up with this yet, right? So like we were talking about the other day, there was a lot of really big trades put on up here. And when we look at the TPO, this is time, price, opportunity, TPO. It's more of a reflection of how many trades happened at that price. When we look at the green one, it's more of how much volume did we get at that price. A lot of times these two are in sync. They're really close together, that we get a lot of trades that has an equal amount of volume in it, and these two red lines match. When they don't match, it's because we either got a lot of trades with really big volume, so that we get this up here, much more volume than trades, and that's what we've got. So that very likely won't catch up to us. There's no way to resolve that issue. We'll just be looking for when do we move next? Where's going to be the next location? It's going to be at least 2 weeks before we catch up to the candles that made this point of control, right? So I'll just pull this across, kind of get the idea. We've got to get all the way to here before we start to see a change in where the point of control is. Because as we start wiping out these candles, then we'll start wiping out that volume that built this point of control. Until then, the only thing that's going to move this point of control is if we redistribute. So if we come down here, for an example, and land into a big pool of liquidity and build out a bunch of volume there, that could bring the point of control down to us. Or say, for an example, we try to get a new breakout above this high and we hit a large liquidity pool up there and it moves it up. Otherwise, if we don't, stay in one spot and build out a lot of volume in a new location, or we don't land into an old level that we could work on or get a new breakout, then this is going to be the point of control for at least 2 weeks. That's okay when it's underneath us. I don't think we'll like it as much if it's over our head. Now, we're in a zone with it, and I wouldn't count on it to be supportive or resistive. It's more of a magnet. So consider this whole area a place where we can just continue to cross back and forth. And in fact, we can get reciprocation. And what that basically means is whatever we have here on one side, we can get that same thing on the other side. So we could get an expansion down into 6111 cog line and still come back up into this zone. If we just tighten this up a little bit, so we've got the upper edge here, and we'll just duplicate it. That's the range that we could chop in, 6100, actually. Yeah, that lines up good. We could chop back and forth around that point of control this much, and it still wouldn't be considered leaving the range. And we get outside of this, and then we come back up to this line or come back down to it, depending on which way we left, then it's likely to act as a support or resistance. But until then, it's not supportive, it's not resistive. It is a point of control. It is also a cog line. So we expect new liquidity to come in every time we get to that spot. We're just going to keep building it out as long as we keep hanging around there. So we had a new VPOC, but we hit it yesterday. We're done with it. And we built a new one. So we'll just move it up to this new location. Nope, I got it a little low. So that's the new VPOC. If we make a break to the upside, we're going to have to deal with 61.61. That's easy enough to remember. Not much to look at on the daily when we consider where we've been this week. We're still inside Monday's range. That's simple enough. Looking at where we are on the week, since we haven't gone anywhere, that 10 is getting closer to us. You can see that we're a little closer to the 10 now. That can happen whether we turn and go towards the 10 or we just stay where we are and let the 10 come to us. Now that is a weekly level, it's 1.4. So, we're far enough away from the 10 week that it won't act as a gravity and pull us back in. But we need to get a little further away. I'd like 2%. 1 is a good start. So we're not seeing any warning or danger from the 10 week. Everything's fine. We're in a good spot. We just want to continue to stay away from it. On the 10-day, you can see that fade back. The concern is we're going to get back into this chop mode that we were in. It's a lot like the point of control that we were just looking at on the 10-day, 30-minute. We're talking about crossing back and forth through that point of control, only here it'd be crossing back and forth through the 10-day. If we're close to the 10-day, it'll act a bit like a magnet and we'll just cross back and forth. We need to get away from that gravity or that magnet so that we can keep the distance and then, get a nice travel. So we're fading back. We're under the half. So that's where the concern starts. If we don't start generating a move away from it, then I think we're going to go back and hit it. It's not necessarily a bad thing that we go back and hit the 10, right? The fact that we've been crossing back and forth through it, through this level, all through all of this, right? This just big mess. If we were to turn moving averages on, they're all tangled up, right? It's a mess. So if we do go back to the 10, it's fine. It's not like some big critical issue at this point. It'd be different if we were in, this really nice, clean, trending price action, holding above a 10, and then come down and bounce off the 10. That would be completely different. Walmart's taking retail down a little bit. We can see that in XRT. We got Staples down, Nat Gas. Looking at what's up, China, whether we're looking at the yen ETF or KWEB or emerging markets, all of those are China. Uranium, MCHI is another China one, and Bitcoin and gold. Now, don't get me wrong, Bitcoin's a good one. It's a representation of risk. That's a nice signal for an upside move, but we can't get a breakout rally day in the S&P and the NASDAQ based on this. We're going to need something more than this. So a continued move in the 10-year, that'll help to the downside, get below that 4.5, get the dollar to maintain below 107, maybe even start moving into that 106.5. Some recovery in the Mag 7 names that we're getting a little bit of a beat down. I think it's too early for Meta yet to start turning around, but that's one that, took a deep dive. But I mean, you had to admit it was due for a drop, right? That was some historic run. All that was like 20 something days to the upside. It had to fall eventually, but I don't consider that pullback at this point to be bearish. Just that it was really owed a pullback. Microsoft has already started. Yesterday, it had that breakout. Being nice to see that continue. Apple had the news yesterday with its product launch. I mean, it was one of those soft launches, right? They didn't do the big spiel and all that. And it was their cheaper products. You can see it really didn't move the needle, but we didn't sell off either. So if we're going to rally, we need the Mag 7. We need their influence and the names that they're connected with. And chips would be really nice. We don't have any of that. So if we're looking for a breakout ahead of the day, we don't got it. Once the market opens, we'll have the options flow. Keep your eye on that. That'd be another way that we could break out and run. Or we could see all of this turn around and start getting that market breadth with the Mag 7 and the chips, and we can get our rally that way. If it isn't from either one of those, keep your eye on Besset, the news, as we get more of these guys chipping teeth today, and see if that moves the needle on the 10-year and the dollar. Otherwise, it'll be a lot like yesterday and a lot like the day before. We'll be expecting the range to continue as we hold the line, waiting on data. So we got the China group, KWeb constituents, solar, Bitcoin, gold, gold miners, precious metals, silver, hot stocks, and uranium. It's kind of a joke. More China with emerging markets. Bonds are up a little bit, which ties in with, the 10-year moving down a little bit. We want to get more out of this. So as I mentioned earlier, keep your eye on either TNX or TLT. TLT to move up, TNX to move down. Yeah, there was some moves in uranium yesterday, tied to Microsoft, no less. Right. So if you're keeping track of the uranium plays, they were getting some flow yesterday. We had we had quantum names tied to Microsoft. We had the uranium names just doing their own thing. OKLO, SMR, NGR, those were making moves. And I don't know how much you guys keep track of sectors. This is Thinkorswim's core sector list. I didn't make it. You don't have to make it. You just go to the public list. And since they're alphabetized, just go to the C's. There's your core sectors. Look at them over a 5-day period. US coal index, 39.4% over the last 5 days compared to all these others that aren't even at, okay, well, here's a one. I was going to say none of them are more than even 5%, but that one is. So we got gambling and coal, but coal outshines all of these. I'd say you could add all of these up and they wouldn't even equal the number that we're looking at in coal there. Energy was getting a lot of moves yesterday. We had S&P Energy, like Devon, EQT, and Oxy. And then in the nuclear space, OKLO, SMR, and NRG, they were going in different directions. Nuclear was down, S&P Energy was up. And then quantum was moving higher. IonQ, QBTS, RGTI. It's a wild ride at this point, but keep your eye on energy, definitely. Whichever energy you want to play. For me, I'm not really interested in solar, but whatever. You got a lot of choices at this point. Pot stocks and uranium. Yeah. I don't know if I would want to try to trade a breakout rally in S&P and the NASDAQ if the rally is led in uranium and pot stocks. On the other side of that, airlines still getting a beat down. I think there was some news this morning on it, but when they started talking about airlines this morning, and then I missed what they were talking about. So I'll have to see if there's something new on airlines. Otherwise, it's just a continuation of the expected drop. Delta, American Airlines, all these guys, right? It's been a nice run. It's time to flip it around. Keep your eye on this CLOU. This is Cloud ETF. This thing, a lot of times, if we get a move after hours from like earnings or something after hours, it'll report that, catch it. But then in the morning, we won't get a move and it'll still be showing what we had after hours from the night before. It's not doing that this morning. This is from today. But if it's just a little algo print, like these little dots up here, then they don't mean much, right? We can see on that day that, if we were looking at those trying to read it as a bullish sign, well, that didn't work out too good, right? So just because it was a little algo print to the upside, we didn't go higher. Now we got a little print to the downside, doesn't mean we're going lower. Not necessarily. Just keep your eye on cloud computing, because of course it ties in with the Mag 7 and chips and the same group. So I mentioned the equal weighting the other day when it comes to, and it depends on which one you want to use, right? You can run equal weighting. I'm going to bring up the one in the Qs, but you've got RSP and SPY. You can run, whether you're using the Spider ETF or Vanguard's ETF, it doesn't really matter, right? The names don't change what it's looking at. What matters is whether or not it's an equal weighted ETF or a regular unweighted ETF. So whether you're looking at RSP versus SPY or QQQE versus QQQ. And if you look at VOO, the question is first, is VOO like SPY unweighted? Or is it like RSP weighted to where they're all treated the same? That'll be the distinction. If it's just the question is Vanguard's ETF on the S&P now overtaking Spider's ETF on the S&P, and what does that mean? It just means everybody's still trading the S&P, right? It's the argument as old as time that the S&P is the most liquid product out there, whether you're looking at SPY, VOO, SPX, XSP, they're all the S&P, all of them, every single one of them. That's why it is the most dominant product that you could trade and the most liquid, sought after, easiest thing to trade. You can benchmark against it, use it for beta weighing, do everything you want with it, because the S&P is the most liquid and impactful product in the market. Comparing VOO to SPY would be like comparing, say, Susquehanna to BlackRock, or, right? Name your big ETF holder, and asking about who's got the dominance now. It won't affect us retail traders either way. Keep your eye on the clock. Watch that 30-year. Don't let that thing sneak up on you guys today. It's going to be, to me, one of the biggest ones to keep your eye on. I mean, don't get me wrong. The Fed speakers, any one of these guys could be taken out of context, say something inappropriate that they, didn't intend to say. But I think the biggest mover after we get the jobs numbers the biggest threat to a move today is going to be the 30-year at 1 o'clock. So keep your eye on the clock. Everybody be careful, be safe. I'll see y'all tomorrow.